What we are witnessing right now is not just a market fluctuation, it is the early stages of a historic wealth transfer. While the masses are distracted by tech stocks, a quiet storm is brewing in the silver market. The insiders, the people who run the mines, are buying with both hands. Today, we break down the structural deficit and the primary leader, First Majestic Silver. First, we have to address the volatility. In January 2026, silver hit a record high of $121, only to violently correct down to the 80s. Most investors panicked. They sold. But the smart money, they saw a gift. This $40 drop was a classic shakeout, flushing out the weak hands and resetting the technicals just as the fundamental supply crunch is tightening. This is the buy zone. You have to understand the disconnect between the paper price and the physical market. The price you see on your screen is often driven by futures contracts, paper promises, but in the physical world, the vaults are draining. There are nearly 100 paper ounces traded for every single physical ounce available. When the physical shortage becomes acute, that paper leverage will break, and the true price discovery will begin. Underneath the noise, the math is undeniable. We are in the sixth consecutive year of a global silver deficit. Since 2020, the world has consumed more silver than it has mined. We have been surviving by draining above-ground stockpiles, but those stockpiles are now critically low. The Silver Institute and the USGS have sounded the alarm. The Earth is simply not yielding enough metal to meet demand. Why can't we just mine more? Because 75% of silver is a byproduct. It comes from copper, lead, and zinc mines. These mines don't care about the silver price. They care about copper. Even if silver goes to $200, they won't ramp up production just for the byproduct. Supply is inelastic. It cannot react to price shocks, which makes the coming squeeze inevitable. Meanwhile, demand is undergoing a paradigm shift. It's not just jewelry anymore. It's solar panels, electric vehicles, and now, the massive energy infrastructure required for artificial intelligence. Industrial use devours nearly 600 million ounces a year. That is 3/4 of global mine supply gone. The US government has listed silver as a critical mineral because modern civilization literally cannot function without it. This brings us to the one company built for this exact moment, First Majestic Silver. In a sea of diversified miners, they are the unicorn, a pure-play silver producer. They don't want to be a gold company. They are betting everything on silver, and their leader is putting his own fortune on the line. Keith Neumeyer isn't just a CEO, he's a company builder. He founded First Quantum Minerals, which became a giant. Now he's doing it with First Majestic. In January 2026, he personally purchased $3 million of stock on the open market. He bought the float at $6 a share. When a billionaire builder buys his own dip with that much conviction, you need to pay attention. He's buying because of the assets. The San Dimas mine in Mexico is a world-class anomaly. It has been producing for 250 years and still holds high-grade veins that keep costs low. It is the cash flow engine of the company. Combined with the Santa Elena mine and the massive new potential from the Los Gatos acquisition, First Majestic has a fortress balance sheet. The leverage here is staggering. Their all-in sustaining costs are roughly $20 an ounce. With silver at $80, they are making $60 of pure margin on every ounce. If silver returns to its highs of $120, their profits don't just go up 20%, they nearly double. That is the power of operating leverage. First Majestic is the aggressive sword of the silver trade, but you also need a shield. Next, we are going to analyze the global giant Pan American Silver and their massive new acquisition. You do not want to miss that breakdown. In our last discussion, we analyzed the sword of the silver trade, First Majestic. Today, we forge the shield. In the violence of a resource bull market, you don't just need aggression, you need a fortress. You need a company built to withstand volatility, absorb geopolitical shocks, and thrive on scale. That company is Pan American Silver. It is the blue chip standard for the entire sector. While other miners bet the farm on a single jurisdiction, Pan American plays the entire board. From the snows of Canada to the deserts of Chile, they operate across the Americas. This is what we call the fortress strategy. If a government in one country changes the rules, or a mine faces an operational issue, the cash flow from the other 7 assets keeps the lights on. It is the only silver major that offers this level of geopolitical hedging, which is critical in today's world. Investors often forget the gold subsidy. Pan American produces over 700,000 ounces of gold annually. Think about that. At $2,000 an ounce, that is over $1.4 billion in revenue. This gold pays for the diesel, the labor, and the overhead. It effectively means their silver production comes out of the ground at a massive discount. When silver prices spike, that margin flows directly to the bottom line. The game changed in 2025. Pan American acquired Mag Silver for $2.1 billion. This was a strategic masterstroke. It gave them 100% ownership of the Juanicipio mine in Mexico. They didn't just buy production, they bought one of the highest grade, lowest cost silver assets on the planet, taking out a major competitor in the process. Juanicipio is what we call a Tier 1 asset. The all-in sustaining cost is projected to be under $16 per ounce. At $80 silver, the margins are astronomical. This single mine is a cash flow machine that will anchor their balance sheet for decades. It transforms them from a stable producer into a growth powerhouse. But the real alpha the hidden value, lies in Guatemala. The Escobal mine is a sleeping giant. It holds over 200 million ounces of silver reserves, but has been suspended since 2017 due to local protests. The market has written this asset down to zero. They assume it will never open again. We think that is a mistake. Pan American is patiently working through the ILO 169 consultation process with the Xinca people. This is a slow, methodical process that respects indigenous rights. It is a masterclass in modern ESG compliance. If, or when, this mine restarts, it adds 20 million ounces of annual production. It is a call option that could double the stock price overnight. Pan American is also a leverage play on the silver to gold ratio. As silver begins to outperform gold, which it historically does in precious metal bull markets, Pan American benefits disproportionately. Their massive silver reserves become more valuable relative to their gold reserves, providing an extra layer of upside for investors who understand this dynamic. Just like at First Majestic, the insiders are buying. But here, it's also the institutions. When the generalist funds return to the sector, they won't buy risky penny stocks. They will buy Pan American. It offers liquidity, a dividend, and safety. It is the first name on the buy list for big capital. Pan American is the giant you own for stability and scale. But what if you want to bring your capital home? What if you want pure American-made leverage? Next, we are heading to the United States to analyze the oldest silver miner in America, Hecla Mining. We have analyzed the aggressive sword of First Majestic and the global shield of Pan American Silver. But for the North American investor, there is one final piece of the puzzle. In an era of rising resource nationalism and shifting global alliances, the most valuable silver in the world is the silver that stays at home. Today, we analyze the oldest and largest primary silver producer in the United States, Hecla Mining. When you invest in mining, you aren't just betting on metal. You are betting on jurisdictions. While others face the uncertainty of South American politics or Mexican regulatory shifts, Hecla operates primarily in the stable jurisdictions of Alaska and Idaho. This domestic premium is why institutions flock to Hecla. It is safe, it is transparent, and it is governed by U.S. law. In a world of chaos, that stability is worth every penny of the premium the market pays for these shares. Just like Neumeier and the team at Pan American, Hecla's leadership is signaling massive confidence. In February 2026, CEO Phil Baker personally purchased 300,000 shares on the open market. This wasn't a small gesture, it was a $1.5 million bet on his own company's future. When the person at the helm, who sees the daily production reports and the drill results, uses his own cash to buy the dip, it tells you everything you need to know about where he thinks this stock is going. Hecla's strength comes from its two flagship assets. Greens Creek in Alaska is one of the highest grade, lowest cost silver mines in the world. It is a geological marvel that has been a cornerstone for decades. Then there is Lucky Friday in Idaho, a deep underground operation that has recently seen massive optimization. Together, these mines deliver roughly 14 million ounces of silver annually. They are high grade, long life assets that form the backbone of American silver production. Now we have to talk about leverage. Hecla's all-in sustaining costs are slightly higher than our previous two examples, hovering around $25 an ounce. To the untrained eye, this looks like a weakness, but for the bull, it is a superpower. At $80 silver, Hecla earns $57 an ounce in profit, but if silver moves to $110, that profit jumps to $85. That is a 50% increase in profit from just a 30% move in the metal. That is the exponential power of leverage. Hecla is also sharpening its focus. They recently sold their Casa Berardi operation for nearly $600 million. Why? Because they want to be a pure silver company. They are shedding the gold-heavy distractions to double down on their silver assets. This capital is being deployed into the Polaris exploration project in Nevada, a massive land package that could hold the next great American silver discovery. They are positioning themselves to be the undisputed king of domestic silver. As the world transitions to a high-tech, green energy economy, silver is no longer optional. It is a critical mineral for national security. From missile guidance systems to the massive solar arrays powering our grid, silver is the indispensable conductor. The US government knows this. The insiders know this. And by owning Hecla, you own the very source of this strategic asset within our own borders. We have built the silver triangle. First Majestic for aggression, Pan American for global stability, and Hecla Mining for domestic security and extreme leverage. These are the three pillars that the insiders are using to position themselves for the next decade. The macro deficit is real, the industrial demand is inelastic, and the physical shortage is approaching. The question is no longer if silver will rise, but how you have positioned yourself for the move. Thank you for walking through this deep dive with me. Subscribe, hit the bell, and stay tuned for our next market intelligence update. I'll see you in the next one.